Minutes from the July Federal Reserve meeting released on Wednesday shed some light on the regulator's plans. The majority of the FOMC members agreed that it would be reasonable to start reducing asset purchases this year, provided that the economy was to evolve broadly as they anticipated. Naturally, such statements did not go unnoticed and caused a reaction across the market. Watch our video review and find out more interesting details. The US dollar index rose sharply following the release of the Fed's minutes. Naturally, we expected an increase, yet it exceeded our forecasts. Now the US dollar index is trading at 93.40. As a rule, the reduction in asset purchases is viewed as a positive factor for the US dollar, as the Fed will not flood the economy with cheap money. However, it's important to understand that there is a limit to any growth. Now, the US dollar lacks drivers for further rise, so it's likely to stay in the range of 93 and 93.60, as these levels seem appropriate for the current situation. The dollar-yen pair continues to recap losses incurred last week. It has already reached the level of 110.25. However, after that, a slight correction has begun, which corresponds to the market situation. After the correction to 109.80, it may rebound to 110.60. Besides, technical indicators signal an upward movement, so the pair is highly likely to edge higher. On Wednesday, the Australian dollar successfully broke the lower border of the descending channel, which was in line with our forecast. On the chart, the downward trend is also clearly seen. The nearest target is the level of 0.7124, which is a low of April 2004. The pair is highly likely to touch this level in the short term. However, before this, the quote may slightly increase. The reason for the possible short-term correction is the positive data on the Australian labour market. Employment rose despite the negative forecast. This is a signal for a consolidation or even a small correction before a more visible decline to the first target of 0.7124. So, despite some small gains, the downward movement will eventually prevail. Now, traders are closely monitoring the trajectory of the US dollar index, which has climbed to a 9-month high against its rivals. It rallied amid expectations that the Federal Reserve would begin to reduce asset purchases this year. Indeed, in the Fed's minutes, bank officials admitted the possibility of tapering the bond buying program this year if the economy continued to improve. Nevertheless, they also noted that employment had not met the substantial further progress benchmark the Fed had said before it would consider raising rates. And that's all for now. We wish you profitable deals and see you on our channel with a new video in a couple of hours.